Welcome back to another portfolio update where I will share with you the changes of my P2P lending portfolio over the past month. As always, nothing in this video is considered investment advice. Your investment goals and financial strategy may differ from mine, so keep that in mind. P2P lending is risky and platforms continue to do whatever is in their best interest, even if it puts you at a disadvantage. So being informed about what's happening is crucial to minimizing your potential losses. Alright, so let's have a look at how the portfolio has developed. On the right side, you can see the changes compared to the previous month. On PeerBerry, I just reinvested the return principal. It's worth noting that due to the shift from short-term to longer-term loans, I only had to reinvest about 5 to 6K last month, reducing the time required to allocate uninvested funds. The vast majority of my portfolio on this platform is current, with no pending payments or funds stuck in recovery. The only downside of PeerBerry is the limited loan availability and lower interest rates compared to the competition. On the other hand, EstateGuru used to offer higher rates, which didn't turn out to be an excellent investment either. Many of the loans in my portfolio remain defaulted, with no recoveries in sight even after 3 years, with little to no actual progress. Moving forward with Esketit, where I further reduced my stake, the newly introduced pending payment feature is annoying. However, at least in my case, the funds were cleared within a few days, so the chances of seeing the same scenario as on lender market is lower. The good news is that withdrawals continue to work. If you have not followed up on the latest news about Esketit's move to Croatia and the deactivation of all liquidity tools, you can watch my previous video right here. As I'm recording this update, Esketit has not provided me with answers to my questions regarding the reactivation of key features, which the platform previously dismissed as subject to availability. We haven't seen any new official communication on Esketit's blog for several weeks now. The statistics page shows record low funding volumes for October, though it remains unclear whether these figures also include loans financed through the Croatian entity. It's still uncertain how Esketit's recent move has affected the funding volumes of the founders' lending businesses, which depend on retail investors to finance their own books. If you're dissatisfied with the removal of liquidity tools, halting new investments may be the most reasonable approach, as the management team has yet to take any visible action in response to investor complaints. At present, Esketit's low-yielding loans from highly leveraged lenders appear not competitive compared to offerings from other platforms in the market. Moving on to Fintown, where I have reinvested the interest from last month. Right now, the platform does not offer any rental property investments, as the parent company is busy developing several new projects. If you don't mind tying up your funds in longer-term development loans, there are still a few available options, but rental projects with monthly cash flow are not currently on the table. I've significantly increased my position on Crowdpear, mainly by investing in 2 B-rated projects. The returns are on the lower side, but the loans are at least backed by real estate, and my experience with their recovery process has been positive so far, something I cannot say about EstateGuru. My portfolio on Lande also continues to grow while providing a stable monthly cash flow. Right now, only 1 loan is in default, while the majority of funded loans perform as expected. Even though Lande may be one of the more boring platforms, I would argue that it's actually a good thing. Investors can enjoy a more passive approach as long as they activate their auto-invest. Additionally, you don't need to worry about pending payments and questionable management decisions, which in all honesty, investors should not have to deal with anyway. Next up is Indemo, where I took advantage of their instant cashback bonus and increased my position. What makes Indemo interesting is that, unlike most platforms, you're actually funding the purchase of discounted mortgage-backed debts that are later recovered for a profit. I've been investing there for over a year now, and so far my experience has been really good. I also had a chat with the CEO last week about their latest updates, upcoming features, and even contingency plans in case of wartime disruptions. If you're already investing or thinking about it, I would definitely recommend watching the full interview in our Indemo review on P2P Empire. When signing up on Indemo with our affiliate link, you can currently get up to 5.5% bonus on your invested funds. Income Marketplace is another platform where my investment in Car keeps performing just as expected. The platform itself is not packed with fancy features, and some investors might even call it a bit underdeveloped, but my experience so far has been solid. The same goes for Afranga and Nectaro, where my Bulgarian and Romanian loans continue to perform well. Both platforms regularly run special promotions that can boost your overall yield. It is usually a great time to top up your positions during those campaigns, otherwise you might end up locking your funds at a lower rate. So make sure to keep an eye on the following promotions listed on our bonus page at P2P Empire. At the end of October, my portfolio value stood at €122,887, representing a 12.5% increase compared to the previous month. The portfolio generated over €1,171, mainly thanks to the generous cashback bonus from Indemo. Most of my funds are allocated to PeerBerry and Fintown, followed by Afranga, Indemo and Lande. Around 5.6% of the portfolio is not performing, while the rest continues to generate interest. The portfolio remains diversified across several countries, mainly Lithuania, the Czech Republic, Spain and Bulgaria. Most of my loans are longer-term loans, such as commercial loans, real estate loans or agricultural loans. The share of rental projects and discounted debt has also increased in the past year. About 31% of my portfolio is secured by collateral, while the remaining 69% consists of unsecured loans backed by the company assets or buyback guarantees. My weighted average interest rate remained at 11.54% with an average investment size of €710, spread across 173 loans in 13 countries. For more details, including the internal return rate for each platform, please visit our portfolio page on P2P Empire or access the semi-raw data on Buy Me a Coffee, which is available to our members. That's it for this month's portfolio update. If you're new to P2P Lending, you can have a look at our platform reviews on P2P Empire. They include up-to-date performance data, information about possible fees and taxes, and for P2P marketplaces like Mintos or PeerBerry, you can also access the key financial metrics of their lending partners, which are essential for you to comprehend as they reflect the risk that you are taking by investing into those loan books. If you found this video helpful, do me a favor, hit the like button and subscribe to not miss out on future updates. Thanks for watching, and I'll catch you in the next one.